Okay. Let's see. Let's try and wait for others to join. Where? I don't know where people are. Kennedy, how are you?
I'm very fine.
All right.
Yeah,
I'm also doing great.
that's nice.
I don't know where people are. They were supposed to be here, but they'll just find us.
Yeah, sure.
Yeah. So which pair should I try to look into?
For example, we can do our DCHF.
Yeah.
Yeah, sure. It's having some mixed reactions concerning the market structure.
Audi CHF.
Yes, the one you flipped the account last few days.
It was crazy. It was crazy. Where? So I believe you should be expecting my computer to be lagging because I'm using Google Meet and everything I believe will be lagging.
Yeah, sure.
I hope you do understand.
I will.
All right. So let me see. This is how's this Swiss franc. Let me just start the analysis from the daily and see if we can get something out of this.
Okay, sure.
All right. So first things first, we do identify the general direction of the market. Actually, let me just start from the weekly daily. Now, we're looking out for
Yeah,
weekly analysis. All right, there.
yeah, sure.
All right. So here we go. Somebody wants to see. Okay. All right. Let's Right here, the first thing I need to identify. is the previous low and the previous high. That is the demand and the supply zone, right? Let me
Yeah.
just make this over here. So mark this. So probably this is the lowest zone over here. We also had this as a high, and also probably this zone over here. So with that, we need to zoom in and try to see what the market is doing, then react to what we'll be seeing. All right. So I have my touches there. I need to draw my trend line. 1 2 3 1 2 3 1 2 3 1 2 3. Boom. I hope you guys can see that. This is the first touch over here, the second touch over here, then the third. So that we also need to do the same thing at the support, just like that. So that is what we have currently at the weekly. We can see that the market was still in a downtrend. So as usual, we know that the market gives us, this is a lower low over here. We have a lower high, lower low over here, lower high. Then now the market came back to give us a lower low, but then this time I can see some sort of a double bottom. All right, so probably we should be looking for buy entries over here, because those are just signs that the market wants to reverse. But let's continue digging in deep to the lower time frame. So I'm going back to the daily and see what the market is trying to do.
Can I interrupt a little bit, please?
Okay.
So once we are in the weekly time frame,
Yeah.
I can see that you have cut out for the last two recent lower highs
Yeah.
and then the third one.
Okay.
But, but in some frames, you find that
Okay.
the lower highs and lower
Ejang
lows are
pre fa be
different.
mena banam da adanam de network.
Somebody's please. Okay, let me just mute him. Suleiman. Okay. All right. So let's continue. So what were you asking?
Yeah.
I was asking about
Yeah.
in some situations, you
Yeah.
find that the market forms a trend,
Yeah.
but you cannot connect a trend line from one trend onto from one point onto another
Yeah.
because we are having some higher lower highs which are above the others.
Okay.
In that situation, what do you do?
We just look for the immediate lows or highs of the
True.
market. So if the highs or the lows do not join, maybe you should just avoid that trade, because I usually advise that we only look for those clear ones, clear touches.
Okay.
All right. So for example, you can see around here we have this attach over here, we have another one over here, another one over here. You can just see how these touches are looking nice. All right, so I
Okay.
just need those clear trends. If the market is not
Okay.
giving me clear trends, then I should be avoiding that trade. I don't want to be involved with that.
And is it advisable to use the line chart?
These trend lines,
Yes.
trend lines, yes, trend lines give you some general direction, of course, and where the market is or where the market will be trying to approach. So
But
it
when
yeah.
we will change to the line chart,
Yeah,
it's likely that that trend line will change.
I don't get it.
For example,
Yeah,
can you please change the candlestick to line chart?
can I?
Switch the candlesticks, the chart to line chart.
I'm not getting you.
Can you please
Yeah.
switch the candle charts
Yeah.
line chart?
Oh, yeah, 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 yeah. I can get that
Yes,
now.
yes,
Oh,
yes.
just like that.
Yeah.
Uh-huh.
Can you please switch? So you can see here,
Yeah.
when we are using the line chart, we
Yeah.
should adjust the trend line.
Oh,
So I'm asking,
yeah.
which is the best way to draw the trend line?
I
Using the line chart or the candlestick
I
chart?
usually, okay, using the line chart, there's no problem if you do that. But the line chart do ignore the wicks that the market do make in the candlesticks.
Okay.
So these ones, there are no wicks. These are just the bodied candlestick. There are no wicks. They have just ignored. So, but I
Yeah.
can't ignore even a wick. That's why at least I have to go back to my candlesticks.
Okay, thank you.
Okay, so let's proceed. All right, so we can see that the market sort of gave us a double bottom over here to give us a reversal sign, probably to go to this upper side, but still we are in a downtrend. So let's go back to the 4 hour and see what we can get. All right, so here we go. All right, so we can see that at the H4 we also had some sort of a reversal to go up. This is another double bottom over here. You can see we had this, and also we had this and this. So those were just great confluence to give us an indication that we were to go up. So if we do adjust our trend line and make them neat, just like this. So we need to draw also trends within trends, because sometimes that is what the market usually give us, trends inside trends. So with that, I have this. I can maybe try, let me see, 1, 2 and 3. Probably that was broken. Let me see if I can get something out of this. All right, so just to avoid being manipulated, at least that will make sense. And then let me just draw over here, if that makes sense. So with that, I need to identify a higher zone. So this is the H4. At the H4 we had this zone over here. This is a high, and you can see at least that price has tried to respect that zone. So let's go and see what's happening at the H1. Right there, that's nice, that's nice. So this is it, this is it at the H1. This is it. Okay, so we need to also understand what the market is doing currently at that time frame. Remember, we've just analyzed the market from the weekly time frame. Right now we are at the H1. So let me just hit the 15 and see if I can get clear trend, because I can see right here that the market gave us some sort of a push to the upside right there, like that. Everything should be clear, I believe, at the 15-minute time frame. We had that, and now let's hit hour 15. All right, so we can see this is what the market actually did at the 15 minutes, right? So I'm still seeing something, some sort of an head and shoulder to now give us a reversal to the downside. Remember that the market gave us an indication to go up, but then currently the market is giving us an indication that it wants to go down. You can see that kind of a conflict, right? I believe you guys can see this over here. We have some sort of a left shoulder over here, then this is kind of a head, and now the market went back for a neckline and giving us some sort of a right shoulder to go down. So we'll just be monitoring and see how the market will be behaving during this period. So with that, of course, I need to identify a neckline where the market did play out for some time. The lowest zone over here, of course, we had this zone. Yeah, that is what I'm talking about. So it's just a matter of time. Actually, let me just do this. Let me just do this. In fact, let me just actually go back to the 1 minute and see what's happening before making my support zone over here. You can see now we are at the 1 minute, all the way from the weekly. That is how the market is always complicated, guys. All right, you just don't make any decisions, right? So basically, I can see that at the 1 minute, this is some sort of a pattern, or I mean some sort of a continuation pattern. We had that impulse move, and currently I believe that the market is trying to give me a correction over here before actually going down. So with that, I need to I need to mark this zone as the lowest point that I need the market to break out. So let me just head back. Okay, just a minute. Let me just see here. I'll see. All right. So let's continue. So what I'm talking about, let me just go back to the 50 minutes. So with that, actually, I'll just also have to identify the left shoulder right there, and maybe that is how we should be seeing the market will be, reacting to this zone. Let me just show you. So probably the market might try to go back to this high to retest this left shoulder, because that might be now a good continuation sign, a good confidence to give us that we should be going down. So I believe that if the market probably goes up, then that will be a great sniper entry to make our sell entry above that zone. But I do prefer that the market, for a safer entry, I do prefer that the market should actually break around this support or that neckline it did create. So I'll just need to add my alert around this zone, around that zone. So I'll be waiting for 1 hour candlestick. Just a minute. Let me do that. All right, so I'll just be waiting for 1 hour candlestick to close below this support. Let me just go back to the 1 hour. Right there. So we have something called 90% rule. So with this 90% rule, I'm still going to anticipate that the market will try to complete or go back to this zone over here, probably to give us now a very clear indication to really go up. Remember, we should be only looking for buy position, but the lower time frame is telling us otherwise. So that is, if only the market or the candlestick or price closes above this support that I just did identify, which is the neckline, then that is where we should be going short and only target this 90% zone, and that is should be around 74 points, of course, or pips, whatever you call it, 75 pips. So the stop loss, of course, should be around, let me see, above that right shoulder, just like that. That is if the market breaks out of this support that it did give us, or that neckline. And if that does not happen, then we should be seeing how the market, let me just do this, because we should be looking for sales, buys, now that we are going up, right? So the only time we should be looking for sales is when the market now comes and touch this resistance. Then that is when we should now be swinging all the way down, but that is after we see how the market will have reacted to that resistance around this zone over here. So let me just do this, just a minute. Just like that. So if the market does not reverse around this zone, then I'm expecting that the market should break this highest zone over here, then come back with a pullback in a correction form, and then if it breaks out of that correction, then that is when we do take our buy entry around this zone, just like this. So it's two ways, guys. It's only two ways. It's either we buy or we sell. So if the market is giving us signs to go up, we should be buying. If it's giving us signs to go down, then probably we should be taking our sell positions. So that is it. So tomorrow we should be seeing how the market will be reacting around, let me just show you, around this zone. So for now we can see that the market actually has already broken out of our trend line, that is at the H1, this uptrend. We can see that the market sort of broke out of that zone and is giving us some sort of an head and shoulder to go down. That is, let me just go back to the 15 for the people who just joined, and maybe give you clear view of this market. So you can see that, all right, at the 15 we can see this sort of an head and shoulder, guys. This is the left shoulder over here. Let me just zoom for you. Let me just zoom right here. All right, so we can see this is sort of a left shoulder right here, then the neckline, then the price gave us head there, then we had, now price has gone to give us the right shoulder. So I'm just waiting for price to complete that right shoulder, then probably if it respects this resistance, then that is when you should be going down. That is, I believe, that is what might happen. And if that does not happen, if price continues going up and breaks out of this resistance, then we should be expecting a buy, that is if it breaks above this zone. Any question? Any question? No question. All right, so which pair should we look? Let me just add this.
GBP card.
GBP card.
Yes.
All right. I'll just add this to my watch list. GBP card, GBP card. Here we are. So let's start from the weekly. All right, so this is the weekly. We need to see where we are. So probably we should identify the highest zone. Of course, we have this as a high, or our supply zone, and of course this our demand zone, and also we need to mark that, and we mark that. So let's continue. Right. So here we go. So this is the weekly. 1 2 3 we execute. Remember that. 1 2 3 we had that. We also had this 1 2 3. Nice. So we can see the price did break out of that uptrend, and then we continue and try to understand what the market is doing at the lower time frame. So let's just hit the daily. Right. Okay, so I can see some sort of a trend right here, some sort of a pattern right here. We do that, we do this. Nice one. Right, so if I go back to the weekly once again, I did identify some sort of a reversal that the market previously did break, and I don't think that the market will break that zone. Let me just show you this zone over here. Look around this zone. The market has played around this zone for some time. So we mark that. Then now, first things first, let me just try to do this. We can see that the market did this. Just a minute. We had this, and the market broke. Probably is trying to give us some sort of a correction then before we go down. So let's go back to the 4 hours now. Right there. Right, so this is how the 4 hour is looking like. Okay, we need to understand what the market is currently doing. Okay, so now let's continue understanding that. So you can see that the market has given us some sort of the third touch. 1 2 3, let me see. Also we had a zone right here. Let me just identify and mark this zone over here. Just like that. So that might be a very sensitive zone for us to take our entry position. So let's just go back to the H1 and see what the market will be doing or trying to say. All right, so let's go. For now, I can see that the market is at the third touch. This is the third touch. This is the third touch. So probably because we had this sort of a resistance around this zone, let me just see. Price might try to do this, come back around this zone, then now go back to retest now this high. Probably if it gives us a reversal sign or structure that is now a double top, then that should be a very good sign for sell positions. Now let's just hit 15 minutes and see what's happening around this zone. Around this zone, around this zone. So I will delete this, I will delete this, I will delete this. Right, so let's see. So we can see that anytime the market hits our resistance, it drops. So let's just confirm this zone over here. If it hits, it drops. If it hits, it drops. All right, yeah. Let me go back to the 1 minute and see what's happening around this zone. So at the 1 minute, I can see some sort of bearish momentum. Right, look at this. We can see that the market gave us this some sort of an impulse move, and now it's trying to give us some sort of a correction. Now if you're a scalper, then this should be a good entry for you, but personally I don't do this. I won't take this trade because I just have to make sure that this correction phase is done away with, that the market just like that. So we can see we had an impulse correction. Now if you are a scalper, probably you should be waiting for the market to break out of this correction phase. For the scalpers, then your stop loss above, of course, this zone, and you should be targeting. Guys, this might happen so fast because the market will be opening today midnight, but the spreads, I believe, won't allow you to take this entry at the 1 minute. So maybe you might be taking your entry later on when that move will have already happened. So this might be the case. So probably this is it. I'm talking about price doing this, give us maybe a third touch, maybe go back, then triggers you in, because I believe price must come back to give us this 90% correction. I believe you guys can see that, and I don't know if this is some sort of also a head and shoulder. We can see some sort of a left shoulder there, we have a head there. All right, yeah, I can see something. Oh, so the market, let me see, there was, oh come on, there was a support here. Yeah, there was a support there. So I believe the market did break and is trying to correct itself. Look at that, broke, and now it's trying to give us this correction, just like I said before, to go down. That is a very good sign. Head and shoulder, of course. Let me just draw that once again. With the left head, and of course we had market. Come on. We had this with the left right there. Head, of course. Can call this a mini right shoulder, just like that, and now it has broken and it's trying to give us this some sort of a correction to go down. I hope that makes sense, gang.
Yeah, sure.
Only for the scalpers, but that is 70 pips. 70 pips can be good for day traders too. So we should be seeing how that happens. But you don't have to make your entries the moment the market opens. You just need to understand what the market will be doing and react to what the market will be doing currently at that time. All right, you can see, let me just correct this. This one is making sense. It's making sense. It's making sense. Right. So if that happens, I believe the market will do this. Will come back. Let me draw this. The market might drop, hit that support, go back now to give us now equal highs, to give us now a double top for a good reversal sign, and that is where I come in. That is where I execute the, because I'm a swing trader. I won't scalp that sell position, but then I'll just make my entry around that zone. You can see around 400. That's a nice one. 400 pips plus. So those are just anticipation. I will be waiting for that because I'm a swing trader, so I'm not going in for those small points. So any question, gang?
No, I'm good. Thank you.
All right, so which pair should we look into? You guys feel free, and maybe we should analyze. This time I'm going to analyze the pairs that you people ask me to do. So any other pair?
Euro card?
Euro card. So if we have GBP card, I believe Euro card should also do the same. Let me just confirm. So now we have two. Euro card, Euro card, Euro card, Euro card. Let's start from the weekly. Weekly. Oh, just a minute. Just a minute. Somebody. Okay. Let's go from the weekly. From the weekly. What's happening? Oh, Suleiman said USD. It's a minute. Your microphone. More.
Yeah, I'm with you.
All
Here
right.
is the card. Let's see.
So let me just look into this first Euro card before I look into that USD card. Okay, this is it.
Okay.
I just have to do that. That's a high. Okay, so we can, first things I need to draw, we can see that the market was in a downtrend, then broke out of that downtrend and went up and started playing around this zone. Okay, so let's go back to the lower time frame and understand what the market is doing currently around this zone. So we just magnifying everything. The
Okay,
daily.
so before we go to the down,
Yeah.
a little bit before we go to the down lower time frames,
Yeah.
when you zoom in the weekly time frame and you
Yeah.
zoom out the candles,
Yeah.
you can see that you can draw a down sloping trend line. Is it?
Yeah, we can do that, but we're just going to. Oh. I don't know which one.
In the, once you zoom out, you see the wicks.
Okay. there's an echo. I don't know which mic is that.
There's an error. Which mic is that?
Kennedy, it's mic.
It's your mic.
No,
All
I
right, so
don't
let's go.
think so.
Alright, so let's go.
Okay, once you are in weekly
Yeah.
and then you zoom out the candle until you see the wicks,
Okay.
there is a trend line that is connecting 2 points, and then the third point, it's somehow like it is respecting.
Which trend line?
Which trend line?
Zoom out the candles.
Should I zoom in or zoom?
Let's zoom in or zoom
Out. Like reset the chart.
That's the reset.
That's the reset.
Yes, you can see
Around this zone.
the two
Around
lower
the zone.
highs. No, here above. Huh?
This or this.
This or this.
No, there above. You can see. No, that side. Huh? Where we have the current market price.
Okay.
There is a lower high.
Here.
Yes, there.
Yeah.
Yes.
Yeah.
Can you drop a trend line connecting these 2 points?
We should be seeing that at the
We
lower
should
time
be
frame.
seeing that at the lower time frame.
Okay.
Yeah.
Yeah.
So let's just go back
Let's
to our
just go
analysis.
back to our analysis.
Okay.
Alright, so here we go. Euro card. We can see this is what is happening. So we have to identify that the market has played around this zone for some time. Actually, it did give some sort of an head and shoulder to give people signs to go down, but nothing happened. We can see. Oh yeah, I did make an entry in this Euro card. Was it? Or we did miss this. I can't remember. So we can see that the market gave us some sort of a fake out left shoulder right there, gave us a head, neckline, then went back to give us right shoulder. So everybody was expecting that the market should be going down if it breaks out of this neckline, and we can see that the market did not do that. It just bounced off and started to give us an uptrend. So let's go back to the 4 hours and try to understand what the market is doing around that zone, and if we can make decisions around that time frame. So we have H4 right there. Alright, so what I can say is, let me just try and see if we can trade a demand and the supply type of trading. So we have this as our supply zone. Of course, this should be a supply right there, then this should be our demand zone. That should be our demand zone. So let's continue. We can see that the market some sort of gave us a reversal here. So right now we just need to understand what the market did and react to what the market will be doing now currently. So this was a reversal sign to go down, and yes, let's give that a good trend line around this zone. We had 1 2 3 1 2 3. So that was some sort of a contraction channel, or rather, let me just, I mean expansion. This was just an expansion or expanding channel. So we had that, then the market broke to go up, and let me just draw a trend line. So we have 1 2 3. The market gave us that, then also another expanding channel. All right, so we're just understanding what the market was doing before we reach around this zone. So with that, all right, so let's continue. So the market broke out of this panning channel, and we can see gave us some sort of an inverse head and shoulder. If you guys can see that around this zone down over here. This is some sort of an inverse head and shoulder, guys. So tiny that you just need to identify. That was just a good sign to go up, and then we need to continue understanding what the market did. Let's go. So right here the market is trying to go back, probably to retest this high. Let me see. So I like drawing these things to understand more. So we just had that, then boom, right there. So if you guys can see what I just drew is some sort of a reversal. Whoa, that was close. So we had this some sort of a double bottom. I hope you guys can see that. That's amazing. So let's continue. Let me just delete this. I like drawing this line to give me more clear direction and understand what the market will be doing. So this area, I believe the market will actually break it and go up. So that's what's up. But let's just analyze what we are currently seeing. So we had that 1 2, then 1 2, right? So let's go and see what the market is doing at the H1. So this is H1, this is H1, this is H1. Was there news on Friday about CAD? I can't remember. But we can say the market really pushed up with a very big candlestick. That must be a Marubozu candlestick. And also we had that 1 2 3 right there. Okay. So currently what I can see is the market is just giving us, just like I talked about GBP CAD, the market is just giving us a good sign to go, maybe to come back around this support, around this zone over here. Then now that is when we should go up and probably make a decision. Let me hit the 15, then 1 minute, and understand what's happening. Right. And if you can see, guys, I don't know if this is a manipulation at the 15. I'm seeing some sort of a reversal, here. You guys can see that. That's an head and shoulder. That's an head and shoulders around this zone. You just need to identify these zones, these patterns. Look at that left shoulder, then this is the head, then this is the neckline, respecting. Price has gone for a right shoulder before we go back. So for the scalpers, here we go. Scalpers, how will we execute? Right there we have a neckline that we need to identify. This is a neckline. A break below this neckline, we execute. Boom. Stop loss around above that right shoulder, because this is it. If I do this, actually everything should be clear at the 1 minute. I believe price is somehow respecting that resistance. Then now for scalpers, you should be targeting that trend line. That is now actually not 76 turned to a day trader. That's not a scalper now. Let me see what's happening at the 1 minute. This current price actually is crazy, because the market's always opening at midnight. At the same time, spread are usually high. So making this entry on a Sunday today is going to be crazy. I believe we are all going to miss these entries. Fingers crossed. Maybe if we don't miss this entry, then it will be a good thing if we don't miss the entry. So maybe we can anticipate that the market or price to play around this zone during that market opening time for some time, maybe for 1 hour, to consolidate. Then after that, if the spreads are reduced, then we execute the moment the market breaks out of this. So we just need to anticipate. This is what I'm talking about. Price to continue playing around this zone, that is continue to range. Then now if it breaks, when the spreads will be down, then that is when we execute. If that does not happen, or if the market does not give us those clear structures, we don't execute. We don't execute because this might be a fake out. So if you execute right now, then the market goes up, you are on your own. So I should add euro card to my watch list. Then let me go and see what's happening with the USD card. Guys, I don't like trading USD card. USD card, I have a bad history with that pair. Every time I do execute, it hits my stop loss. So I usually avoid that pair. Since I started trading, I usually lose when I trade USD card. I believe I actually deleted that pair. I strongly believe I did delete that pair. And yes, I did delete it. Oh, right here. I don't trade this pair.
It's okay, just for purpose of analysis, even if you can't take the trade.
Alright. Let me start from the weekly. This pair usually manipulate me for I don't know. I don't like this pair. Alright, so let's see. This is the weekly. I don't know if price might be going up to give us a triple top. I don't know. Let me see. 1, 2, 3. 1, 2, 3. Might be a good sign. So we just need to start from that. With that in mind, identify this as a high right there. This is a low right there. Then we also identify this and also identify that zone, and let's hit the daily. Two. At the daily, I'm seeing something called a bullish continuation pattern. That's a flag. 1, 2, 3. 1, 2, 3. And yes, it got broke. 1, 2, 3. Here you go, baby. So right. So our anticipation is right. Price coming to give us the third touch, triple top, to go down. Yes, that's what's up. And we can see that the market has already broken out of this flag pattern. You guys can see that. That's a very good continuation pattern. Look at this. We had an impulse move. Then the market gave us some sort of a correction or a continuation pattern. And then the market went up, manipulated people, because everybody thinks that every card touch we execute. Look at that. But look at this. The market gave us that false move to the down and then took out everybody. That's how it works. Forgetting that this was all a continuation pattern or a correction. So if you were trading that, you got caught, man. So let's go and see what the market is doing at the 4 hours. At the 4 hours, this is what's happening, baby. Right there we can see the market gave us a higher high, higher low, and higher high, higher low, went back to give us a higher high. We should be expecting probably a higher low. Let's do this. One, two, three. Look at it. 1, 2, 3. That's nice. So let's hit the H1. Let me hit the H1. So we need to make everything clear now. Right. So we can see that the market is at the third touch. So we just have to be keen before we make our decision whether it's a sell entry, because we can't take a buy entry right now. But at the same time, we do understand that this market has the potential to go up and give us the third touch, so it should be for buys. And we only go take a buy position at the lowest zone, that is our demand zone, right? Then sell position at the supply zone. So currently the market is at the supply zone, so let's see what the market is doing at the 15. So the market should be giving us signs to go down. That is what I believe, but we need to understand everything before we make decision. So currently we can see we are still in an uptrend though, but the market has reached that resistance, and let me just go back and see what's happening at the 1 minute first. Nice. Thank you, thank you, thank you. All right. So at the 1 minute, there's also a trend. We have trends within trends. So we have that. We had the, oh, this is looking amazing. Like I said before, that this should be dropping before we take our buy entry. Now these are just sniper entry, man. These are sniper entries. So this is 1 minute. 1 2 3 drop. 1 2 3, and then you can see when the market just, whoa, look at this. We have this, some sort of a left shoulder there, neckline, head, neckline. We're going back for our right shoulder before we go down. I believe you can see everything about card. It's just giving us an indication to go down. Now if we identify this as a high from that left shoulder perspective, we can also see that market somehow respecting that zone. This is the 1 minute. Okay, and then at the same time I can see some sort of a lower low and a lower high. You can see the low, lower, oh, I don't know what's happening. Lower low, lower low, lower high, low. I don't know if this is a lower high, so probably that might be a continuation sign too, because usually I like to understand how the market is approaching a support or a resistance. Usually gives me clear directions. So I can see that the market did this. Let me draw this. The market has done this, then probably might playing around this zone to give us that sort of a continuation pattern to go down, because I can identify this zone 1 2 3. Nice one. Remember, this is the 1 minute. Now do this. That makes sense. That makes sense, right? There's also another manipulation we can see over here. You need to understand everything, because at the same time we are still in an uptrend though. You can see 1 2 3, the market broke. You can see that 1 2 3, the market broke, and sometimes, I mean, sort of giving us a sign to go up, but we won't fall for that, because generally I can see a reversal. So for a good buy entry, that the market has to close above this zone. But I don't know why you should be taking a buy entry around this zone, because this, like I said before, we have a resistance. I don't know if you're a scalper. Let me see. Take a buy entry around this zone. Scalper, oh, it's only 5 pips. I don't know if you can survive off that. But what I'm seeing in a bigger picture is just a sell position. So if the market breaks, let me go back that 1 minute. Alright, so we have this as the last low, I believe so. This is the last low. So I usually recommend that if the market now breaks around this zone, then now we should be taking our entry. Then our stop loss above that, that should be tight around 9 pips. Let me just add an alert around this zone. At the same time, the market might go up to give us a double top. Now, those are just anticipation. Like I said before, just need to understand what the market will be doing. Look at this. The market might go back to give us an equal high, like I said, with that 5 pips. So we should be having this. Let me just draw this. Something like this. Equal highs. That's why I'm talking about the market doing this, going up, then now dropping. That will be now the best sign or the best confluence for a sell position. So these are the anticipation. If this, let me just draw that first. So if the market does not break out from this uptrend, this small mini uptrend, if the market does not change its character to go down but continue going up, I should be seeing how it will be reacting around this zone over here. So let me just draw this and show you what I'm talking about. Sort of this, yeah, like this, I believe, yeah, something like this. This is what I should be, something of the sort. So if it continues going up, I should be seeing how this price will be behaving around this resistance, and maybe now continue waiting for my breakout around this zone. So this is just going to be my entry zone. I'm not going to check the entry zone. So if the market continues going up, then I'm not going to take the trade. I just have to understand what the market will be doing. But I'm in for sales, and if the sales that entry do not come, I should be understanding again what the market will be doing before making my positions. So let me just extend this. Boom. So 90% scalpers, of course, we have that. You can target this. Scalpers, day traders, of course, you know what to do. Where we need to identify this low, 71 points. But I'm a swing trader. I'll go in because I'm understanding that the market is coming to give us the third touch on our support trend line around this zone. So that should be my target. You don't need to hold. Just take what the market has given you. I think that's what's up. So USD card, I'll add this to my watch list, and maybe I'll try to see if I can take the trade. But like I said before, I have a bad history with this pair, USD card. So if my stop loss get hit, then I'm going to blame the person who said we should take USD card. Alright. Should we look into another pair? Only the last pair, but I'm tired. Any pair?
What are your favorite pairs you mostly trade?
I don't have a favorite. I do analyze and see if the market plays out nicely. I do take it. As you can see, my watch list, I have so many pairs, so I don't have favorite. Any pair goes. Oh, USD Swiss franc. We were still in that trade. We were still in that swing. Let me see. Right there. Alright, so USD Swiss franc, I'm expecting pullbacks to come back to the trend line, then see if we can add more buy position. Like I say, this was my swing trade and I'm still holding. You can see from this zone, and I'm still going in. So I'm expecting pullback. I need price. Oh, it did. I did not see that. Oh, price gave us that pullback already. Alright, that's what's up. That's nice. Yeah. That's okay. So this is USD Swiss franc. I'm expecting that the market should actually give me a break. Let me just identify this as the newest high. Alright. So I'm just expecting that the market to break out of that new high that it did create. Then I add my buy position. I just have to stack until take profit. Take profit is hit, but at the same time, guys, remember, I'm securing my profits. Of course, you can see over here I have stop loss, so this first entry is secured. So when the market breaks out of this previous high that it did create, then I'll make another entry position around this zone, just like that. Then I'll secure the second profit, this entry, and that is how I'm still expecting. Let me just draw that. Let me draw this for you.
Will you end up that it breaks and then it resets, ama will you end up when it breaks?
Please turn off the music system. So I'm expecting that the market should be doing this. Alright. Maybe I should do this. If it breaks and make a buy entry, then I'm expecting for a pullback, of course. Then it goes up, give me new high, of course, play around that. Then wait for a pullback, wait for the market to break out of this new high that it would have created. Then I take another buy position around this zone, just like that. Then wait for the market to go up, create new high, come back. Now identify this as a high. If it breaks, make another buy position. And that is how I will be doing on this USDCHF until we reach to our destination. And the market does not do that and maybe try to reverse on us, then I don't have a problem with that because my profits are secured. So that will be okay. I don't have a problem with that. But I'm not going to close the trade anyway. I'll let the market take me out. I'll not close. It's either the market takes me out or I take the profit. So it's only two ways. And I'm tired, guys. One eye is great. I'm going to upload this video on YouTube, and probably you might refer to that next week. That is tomorrow. You must refer before we make your entry decision. So I believe that's what's up. I hope you guys are okay now.
Yeah, thank you very much.
All right.
Thank you, sir.
All right. So let me say, I wish you a successful trading week. All right.
You too.
Adios.